Welcome to the Monday edition of the Tech Stocks Daily Podcast, where the tech stock roller coaster keeps us on the edge of our seats. Today, we'll explore Apple's sizzling financial forecast as it preps to unveil eye-popping first-quarter earnings, despite smartphone competition from China. Next up, we'll dive into the world of MicroStrategy, where Bitcoin's recent moves are shaking things up. Legal thunderbolts strike Marqeta and Symbotic, both caught in the crosshairs of investor lawsuits alleging some questionable financial practices. We'll break down what this means for traders and what to watch next. Buckle up for a feast of insights and don't miss a beat. Folks, if today's news banners had hashtags, they'd all be flashing Apple Mania. Yep, Apple is the talk of the town as it gears up to unveil its first quarter fiscal 2025 earnings, and there's a delicious buffet of developments on the platter. So grab your apple cider, top off those AirPods, and let's dive into the juicy updates. First up, Apple's financial dance card. The tech titan is about to roll out its fiscal numbers, and analysts are revving their spreadsheets. The first quarter, spanning the lucrative holiday season, traditionally rings the cash registers at Cupertino HQ like no other. Apple projects the revenues will waltz up a smooth low to mid single digits compared to last year, closing in around $124.4 billion. Wall Street can't wait to see if Tim Cook's team can once again outpace those profit forecasts, especially with expected earnings pegged at $236 per share. Now the spotlight on the iPhone narrative. While the world's favorite rectangle with edges joined forces with iOS 17 to deliver joy across the lands, the pomp has been pinched somewhat by tough cookies in China, namely Huawei and Xiaomi. The competition's got the spotlight, contributing to forecasts of a slight dip to $69.189 billion in iPhone sales this quarter. But fret not, because Apple's not just dangling from the smartphone vine. Indeed, what Apple deflates on the iPhone front, it reinflates with its booming services segment, which, like a good playlist, keeps cranking up the tempo. With over 1 billion paid subscribers already in its bouquet of goodies like Apple TV Plus, Arcade, and Apple One, expect this segment to grow at a double-digit pace. The Cash Cow Club should be renamed in honor of Cupertino. If you think Mac could be on idle, think again. Those trusty desk companions are trot syncing up the shipment increase path with a magical 17.3% rise, helping Mac steadily carve a shape in the PC landscape. Then there's Apple's fledgling sweetheart, Apple Intelligence, rolling it toward promises galore. With iOS 18.4 whispering in the winds, we can almost talk to devices the way our ancestors would communicate with non-sentience. The upcoming updates promise a Siri polished more than the marbles at the Vatican, new languages in tow, and let's not forget the quirky emoji additions. What's a message without a root vegetable, after all? Surprised? In typical Cupertino fashion, Apple throws us a red herring with the talk of AirPods and possible camera add-ons by 2026. Just imagine capturing your jealous colleague's crestfallen face when you share the cinema ticket confirmations, out loud. As Apple carries the Zacks Principal Advisory cautioning a number 4 rank, the place still appears destined for further accomplishments, poised to handspring into AI realities over the long haul. Sure, investors might mull over holding off today, but the bigger picture suggests Apple isn't drying applesauce. It's juicing up an exciting playmake. Stay tuned to marvel at Apple's financial tango, gaze in wonder plots of AirPods unconcluded, and watch your inbox for more, because Apple's not just running ahead, it's effectively starting a marathon. Hold on to your hats, folks, because MicroStrategy is making waves in the tech world today. This Bitcoin-loving company has been making headlines after spending a whopping $1.1 billion to acquire 10,107 Bitcoins at around $105,596 each. Michael Saylor, the co-founder and executive chairman, continues to preach the gospel of Bitcoin as an inflation hedge and a tool for preserving long-term wealth. But wait, don't cue the congratulations just yet. Prices have taken a dip, leaving Bitcoin currently dancing around the $100,700 mark. Talks about timing, am I right? Now, why are these heavyweight Bitcoin movers in the news today? For starters, they are under the spotlight for their push with a fresh preferred stock offering to further fuel their insatiable Bitcoin appetite. MicroStrategy's plan to sell up to 2.5 million shares of Series A perpetual strike preferred stock means they're going all in, intending to bolster their cryptocurrency acquisitions alongside their daily business expenses. This offering isn't just cookie cutter. It includes flowing perks like fixed-rate cumulative dividends and intriguing conditions for potential conversion into Class A common stock. Whether MicroStrategy is onto a big winner or a peculiar pickle is the million-dollar question, and all tech investors are watching. Of course, nothing screams drama louder than a ticking tech spectacle, as DeepSeek, China's sudden AI superhero, plunges onto the scene, unsettling the market equilibrium. As the new darling of the App Store, DeepSeek threatens to redefine the artificial intelligence narrative, sending shockwaves through cryptocurrency and squeezing the equity market, with MicroStrategy bearing the brunt. If this AI meteor turns out to make a lasting impact, it could be redefining AI development, dismissing the notion that hefty GPU investments are indispensable for exceptional snooze-worthy AI performance. Perhaps Zuckerberg should App Store-proof Meta's entrance? The jitters around Bitcoin aren't just technological gambits. Analysts pointed to CME futures influencing Bitcoin's dip, as well as the specter of the 2022 Inflation Reduction Act. The thought of a 15% corporate tax on unrealized BTC gains should make any finance officer clutch their ledger. Despite the financial eclipse whispers, analysts and the rumor torrents skating around Twitter denounce these claims as empty chatter, for now. At the end of the day, MicroStrategy stock, listed on the NASDAQ as MSTR, and Bitcoin both took a downward swoop, cascading over 5% each. Despite the declines, analysts remain bullish with a consensus buy rating, projecting nearly 87.85% upside potential for the stock, proving that when it comes to analyzing this turbulent sea of tech investments, it's all about surfboard balancing, yet a torpedoes. So get ready for more spine-tingling updates as we follow MicroStrategy's journey. A saga of crypto conquistadors, AI insurgents, stock swing secrets, and one man's empire against financial frontiers, captained by the undeterred Michael Saylor himself. Get the popcorn ready, because, who knows, this story isn't over yet. Stay tuned. Oh boy, Marqeta made quite the splash in the tech news pool today. For those not in the loop, Marqeta, a hotshot player listed on NASDAQ under the ticker MQ, found itself amidst the legal storm clouds. It's essentially raining lawsuits for this financial services company, so let's dive into the details of what's going on. Marqeta investors filed not one, but two class action lawsuits against the company. The allegations, misrepresentations, and failures to disclose crucial information that would have otherwise painted a less rosy picture of their business prospects. A lot of shoppers, investors, picked up Marqeta securities between May 7, 2024 and November 4, 2024, supposedly getting the short end of the regulatory stick they didn't see coming. First in line, representing investor grievances, is the Radnor PA-based law titan, Kessler Topaz Meltzer & Check, LLP. They've reached out, megaphone style, to Marqeta's investors, reminding them of their right to stand at the forefront of this legal battle, since there's a filing deadline looming on February 7, 2025. The complaints suggest Marqeta wasn't entirely forthcoming about some significant challenges that threatened its business forecasts. In fact, it was reported that the company underestimated regulatory hurdles that led management to eventually slash their Q4 2024 guidance. Oh snap, not to be left out, Bernstein Liebhard LLP, a premier investor rights firm based in New York, echoed similar sentiments. This second lawsuit, lodged in the U.S. District Court for Northern California, clearly the go-to jurisdiction for tech battles, also casts its net over Marqeta and its key executives. They were caught up in a blitz for allegedly glossing over difficult-to-chew regulatory news affecting the company's business outlook. Particular attention was directed towards potential violations of the Securities Exchange Act of 1934. Both law firms extend their expertise on a contingency fee basis, reassuring poor investor lambs they won't penny up unless there's a recovery. So, if you hear the rallying cries from Kessler or Bernstein, and your pockets were lightened on Marqeta trades during the cited period, you've got till the same February date to jump on the lead plaintiff bandwagon or remain a distant popcorn-munching class member. The bigger picture here is that investors turning to legal channels reflects potential cracks in Marqeta's corporate visage, raising crucial questions about transparency and accountability. Whether anything sticks or slides off in court remains to be seen. Meanwhile, Marqeta's leaders are likely burning the midnight oil, racking up legal hours faster than you can say Securities Exchange Act of 1934, trying to ensure their defense doesn't resemble Swiss cheese. So there you have it, a tech tale of intrigue, lawsuits, and the quest for clarity. Whether you're an invested Marqeta ally or just a curious spectator, keep those tweet notifications on because this courtroom drama is just getting started. Today in tech news, the spotlight's been turned up on Symbotic Inc., and not because of a revolutionary warehouse automation breakthrough, but due to a looming financial controversy. Symbotic, that cool tech gig synonymous with automating warehouse operations, has found itself in hot water with not one but two prominent law firms raising a stink over its recent financial sorcery. Here's what's unraveling. Symbotic is being accused of, wait for it, creative accounting. According to the recent allegations, between February 8, 2024 and November 26, 2024, Symbotic might have taken some liberties with its revenue recognition practices. Think more Hollywood special effects than Microsoft Excel magic. Investors are crying foul over disclosures that indicated some eyebrow-raising errors concerning cost overruns on some projects that couldn't be invoiced. Worse, these hiccups impacted Symbotic's reported system revenue, pre-tax income, and gross margins, not exactly music to investor ears. The fallout was immediate and unsympathetic, nosediving Symbotic's stock price by a staggering 36%. Now let's set the stage because this isn't your run-of-the-mill courtroom drama. Two heavyweight law firms, Bernstein Liebhard LLP and Robbins Geller Rudman and Dowd LLP, are inviting beleaguered investors to join class action lawsuits. That's right, folks, lawyering up and circling the wagons. They're both seeking potential lead plaintiffs, those who perhaps watched their financial portfolios imitate a famous sinking movie ship and now are looking for retribution. To be the lead plaintiff doesn't necessarily require juggling gavels. Any willing investor with substantial losses from that pesky class period can apply. And it sounds like it's merit badges all around because being a lead plaintiff isn't required to benefit from a future recovery settlement. It's essentially the law and order way of the markets, saying, we got you covered. Now over to you, savvy viewers. What are your thoughts on this situation? Are systems breaking down? Or is there more to this saga than we're seeing in today's headlines? Share your thoughts in the comments. I mean, have you seen situations like this before with other tech companies? Where heads in the clouds when they should have been looking at spreadsheets? Let's hear your take. Your insights might just shine a different spotlight on this corporate hubbub. Remember, while financial inaccuracies can be the villain today, the way companies handle these situations can define their future. So gear up, community. Let's dive into this topic, share your perspective, and maybe, just maybe, fish out some key wisdom from the rapids of controversy. Can't wait to read what you all think. Let's jump right into Apple's arena. Given the news today, here's the plan. I'd consider holding on to Apple stock. Why hold, you ask? Well, despite the slight dip in iPhone sales, a move signified by competitors in China, Apple traditionally thrives on its holiday season, and it's still churning about 124 billions from this quarter alone. Now hang tight with those earbuds because here's the twist. The iPhone isn't the Lone Ranger drawing crowds anymore. Apple's services division is like a mango about to ripen, delightfully poised for growth. With over 1 billion subscribers already jazzed with Apple TV Plus, Arcade, and more, this segment's likely to keep cranking up faster than my toaster burns bread, and that's music to any investor's ears. Now on the tech frontier, there's a clamor about Apple's even shinier Siri and awe-inspiring iOS updates that promise to slap a grin on your face like a new emoji set features a root vegetable. Pair that with potential AirPods camera add-ons, and you've got yourself a juicy ongoing venture, sharpening visions for a fruitful long-haul narrative. Yet bear in mind, Apple is navigating advisories of a cautious number 4 rank, so it's not an all clear for exuberant shout-outs of new purchases. We layer the ascent potential with the stability to satisfactorily say, wait, gauge a bit, hold your ground, let the developments chart clearer paths over this fascinating roller coaster ride. However, let's be real here, my savvy listeners. It's all about DYOD. Do your own diligence. Before you decide to follow me into investment territory with binoculars pointed Cupertino-ward, take a hot mint tea break and dissect all data. Ensure that your decision aligns soundly with your financial sales. Face the stock market like a chess grandmaster adorned in AI-powered glasses and think strategically to carve your success, navigating through apples, ticks, and Ogun quests alike, raw or arranged. Trust in your research as much as Siri seems to trust in her now polished vocabulary collection. Stay savvy and keep blending knowledge into action. In today's whirlpool of tech market action, we've seen Apple bracing to waltz through fiscal earnings, despite some ticklish competition from China. With Apple's services division promising to light up brighter than a holiday sale, they're quite the ticker to watch. Over in the cryptoverse, MicroStrategy is dipping but undeterred, still bullish on Bitcoin amid rollercoaster market vibes and AI plot twists. Meanwhile, Marqeta and Symbotic find themselves sorting through class action lawsuits, both sparking investor concerns and courtroom narratives. It's a roller coaster of tech-tastic updates, sure to keep you on your toes. Pumped for more tech drama? Be sure to like, subscribe, and share this video. Keep your gadgets handy and your curiosity stronger as we delve deeper into the stormy seas of the tech world tomorrow. Stay plugged in.